The next question is E5.17. Shakov Corporation Statement of Financial Position at the end of 2018 included the following items. So there are several items under the company's statement of financial position. So the following information is available for 2019. So there are 10 data that are given. It is all related to the statement of cash flow. So the instructions: A. Prepare a statement of cash flow for 2019. B. Prepare a statement of financial position at December 31st, 2019. So the first thing that we need to do is to prepare the statement of cash flow. Okay, so we will use the indirect method, because the data given are the data for indirect method. Okay, so we'll start the statement of cash flow. Cash flow from operating activities. The net income is 55,000 as it is given in number 1, additional information. And then adjustment to reconcile to net cash flow from operating activities. So the second information is about the sale of the equipment. So equipment cost 20,000 and accumulated depreciation 8,000 was sold for 9,000. So remember, once again, you need to calculate how much is the book value of the equipment. So it is very simple. You can just take the cost minus the accumulated depreciation. So it will be 20,000 minus 8,000. Therefore, the book value is 12,000. Actually, the equipment was sold only for 9,000. So it's below the book value. If it is below, so it will be lost on sale of equipment. Because you sell it below the book value. So 9,000 minus 12,000, it will be minus 3,000. So because it is a loss, okay, it will be added into the net income. If it is gain, it will be minus. Okay, and then remember we need to add the depreciation expense and also amortization, because those expenses are non-cash expenses. So we need to add it back into the net income. Okay, and then the number 5, current asset other than cash increased by 25,000. So remember, if current asset is increased, it will be minus. And then current liabilities increased by 13,000. Okay, so current liabilities, if it is increased, it will be added. Okay, so you just add all of this, will become 6,500. And then your net cash flow from operating activities will be 55,000 plus 6,500. It will become 61,500. And then for investing activities, starting from number 6, an addition to the building was completed at a cost of 27,000. So before that, remember we have sale of the equipment of 9,000, at number 2. And then the number 6 is addition to the building. So we pay something to add something into the building. So of course it's a cash outflow, minus 27,000. And then number 7, a long-term investment in debt securities was purchased for 16,000. So remember, not only PPE, but also the investment is also included into the investing activities. So because we purchase, it will be minus 16,000. So the net cash flow from investing activities will be minus 34,000. And then for financing activities, starting from number 8, bonds payable of 50,000 were issued. Okay, so because we issue bonds payable, we will receive the cash. So it is positive, issuance of bonds payable. And then number 9, cash dividends of 25,000 were declared and paid. So we have declared and paid already. So of course it is negative, because we paid. And then number 10, treasury shares were purchased at a cost of 11,000. So we repurchase our shares that we have issued. So because we purchased, of course, it is a minus. So net cash flow from financing activities is 14,000. So the net increase in cash will be 41,500. Because we don't have the beginning balance, we cannot calculate the ending balance of the cash. And then B, we need to do the statement of financial position. So all of these data are still unadjusted. So you need to adjust it all according to the information that is already given here. Yeah, 1 to 10. Okay, so we'll start with our current asset. So current asset, the beginning balance is 235,000. Remember, you need to add 25,000 because it's increased. Yeah, and then we need to add 41,500. Yeah, because cash is also current asset. Yeah, so that's why the amount is 301,500. Okay, and then we'll have the long-term investment because here there is no long-term investment and we purchase it, so we'll have the long-term investment of 16,000. And then for PPE, okay, the land is 30,000 constant because there's no any other additional information. And then for equipment, okay, 70,000. It will be from 90,000 minus 20,000 because we have sell our equipment. Okay, and then for the accumulated depreciation, it will be minus 12,000. Is from 11 minus 11,000, and then you will minus the 8,000. Okay, so 3,000, and then you will plus 9,000 again, so will be minus 12,000. So you will get the book value of 58,000. For buildings, okay, 147,000 is from 120,000 plus these additions. Okay, it will become 147. And then the accumulated depreciation, you can just take this minus 30,000 and then plus 4,000. So the book value is 113,000, and then the total PPE is 201. And then for pattern is 40,000, and then you have to minus the amortization of 2,500. So it will be directly minus. Yeah, no accumulated amortization. So the pattern is 37,500. Then you will sum off the assets, you will get the total of 556,000. For current liabilities, you will just take the 150,000 plus 13,000. Yeah, become 163. And then bonds payable, you have to take the 100,000 plus the 50,000 that we have issued. So 150,000. And then share capital ordinary, it will be constant. And then for retained earnings, of course, you need to update it. You will have to add the 55,000 net income. Okay, and then you will have to minus the dividends of 25,000. Yeah, so it will become 74,000. And then you have to minus the treasury stock that we have purchased. Okay, so you'll get the total stockholders equity, and then you sum all of it, you will get the same total liabilities and stockholders equity of 556,000.